And we're back. It's July 23rd. Paul Capetta's here. Paul, how you doing?
I'm doing great, man. It's going to be hot today.
It's going to be a hot one. They're turning it up. Had a really nice few days here in the Midwest, but now back to a stretch of 90 plus, humidity, everything that makes you feel, it wouldn't be summertime Chicago without it. But Paul, what have you been up to, man? What's going on?
Not a whole lot, man. Just enjoying the summer.
What does that mean? I asked Twitter what like good weather or sunshine means for him, and he said, what did he say? He went bowling with his sister and mom. I don't know.
Not a big fan of bowling.
Didn't make sense to me. But what's summer activities?
Usually golf.
Okay.
Kind of in the lull part of the summer, you're just kind of enjoying it. But it's also been raining a lot here. It's kind of like every couple of days we get hammered with thunderstorms, which is normal.
Mm-hmm.
But I guess there's this thing called corn sweat going on, which I just learned was a thing.
That's the Superman. Corn sweat?
It's apparently causes humidity, and this afternoon it's going to feel like 105.
Corn sweat. Okay, hold on.
I'm glad we're doing this because I didn't do this before.
Corn sweat. Agricultural impact of heat dome. Holy smokes. So wait, what is this stuff? What does this do?
So it basically adds to the humidity in the air because the corn is essentially sweating, which I think is the non-chemistry term for this.
So the corn gets hot.
And
we live near the corn. The corn gets hot.
Mm-hmm.
It gives off even more humidity.
Yes, exactly.
Holy smokes. I was thinking, who's the guy that played Superman actor? Oh, I don't care about Christopher. I mean, I do, but, in a respectful way. 2025. David Corn Sweat. That's the guy. I thought you were talking about that guy.
That's an interesting conundrum there.
Interesting time for that sound here in American culture.
Yeah.
Probably the most popular it's ever been. I've never heard of corn sweat before as a phenomenon, and I've never heard of David Corn Sweat, but he is the most recent Superman. You seen it?
No.
Don't care?
Don't care.
Don't care about Marvel?
Not a big fan. I like the Dark Knight trilogy, but I don't like Marvel.
That is a classic. I don't mean this in a rude way, but that is like a very classic dude take, I feel like, which is like, don't care about this supernatural stuff, like Thor hanging out with Iron Man doesn't matter to me, but like the Dark Knight was pretty sick.
Yeah. Yeah. Exactly.
All right, I'll take it. I kind of want to see this. I don't really care about any of this stuff. It's just like when it's entertaining. I watched that Thunderbolts movie.
Yeah. All right.
Fine. Not that entertaining. I don't know. I feel like a lot of those movies are like people go nuts because they're like, oh, like so-and-so just showed up with so-and-so. And it's like I don't have any background for it. And so it's completely lost on me. But if it's entertaining, it's entertaining. But all right, that's enough. No Superman talk. No more corn sweat. Let's get in the market. It's Wednesday. Got some action going. You probably know this better than me. There was an announcement either last night or this morning that we have struck a deal with Japan.
Yeah.
Is that true?
We did strike a deal with Japan.
Okay.
Lower than the initial tariffs. I think they're 15%. Some initial positive news out of the auto industry out of Japan, so that's obviously a big deal for things like Honda and Toyota. But if you get into dollar yen here, this thing was all over the place last night. And we did actually have some other news out of Japan. So the initial reaction was some yen buying, so dollar yen sold off a bit on the initial trade news. And then there was news that the Prime Minister of Japan is actually resigning in August.
Okay.
So that kind of caused yen to depreciate against the dollar. You saw the bounce back in dollar yen. And then this morning, we're right back to where we kind of closed today. So it's been all over the place. Lots of news coming out of Japan. Kind of at the swing lows here, too. which is really interesting to see where we're going to go from here.
Yeah, talked to Twitter about this yesterday, and we were, I think, in this little pocket right in here, where it's like, okay, we're dancing around 147 to 147 half, and my point was just like, okay, I mean, every time we've moved on to a new, if I widen out here, every time we've moved on to a new high in this pair here in July, we've taken a little bit of a breather, 100-point breather or so, and then continued higher. And so my point, when we're in this junk, Monday into Tuesday morning here, I'm like, okay, if we have a bounce back here on Tuesday afternoon or Wednesday or Thursday, is 150, the 150 level that, has been so important the last couple of years, and has, not been relevant for decades prior to the last couple of years. Is that back in play? And it seems like, what we've seen throughout the rest of yesterday was some further dollar selling. And then last night, to your point, here's probably all of that mixed of news of, maybe this is the tariff announcement or the deal announcement in here where you start to see some yen buying, and then here you have some yen selling, and these are, this is almost 100-point range in 2 or 3 hours. So pretty good back and forth for Asia just waking up, and obviously the U.S. and Europe not being no overlap with that Asian session here last night at 8 o'clock, 9 o'clock, 10 o'clock Eastern. But it's interesting, Paul. We're seeing the same thing that we saw here on Sunday night as they started to digest this Japanese election news, which I tried to cover as best as I can. From what I can glean, there are some conservative upstarts in Japan that have taken a number of what I guess would be the equivalent of their congressional seats or whatever. And there was some pressure, it seems, on the prime minister. I forget his name now. Whatever, doesn't matter. I mean, he's great, I'm sure, but doesn't really matter for what we're talking about. And so you're saying that last night, further a little bit of this, not instability, but potential change in Japanese politics, met with some yen selling. But again, as they digest it, it seems like this potential sea change in Japanese politics is being translated as hawkish or bullish for the yen.
Yeah. And I just Googled this now because I was interested to see what his name was, and he actually is denying that he's going to resign. So
wow.
It's a little,
this is the U.S. playbook.
Yeah. Yeah. I know we were talking yesterday. There was a fake letter going around on Twitter about Jerome Powell quitting, so that was funny.
I remarked that that's the most 2025 story I've ever heard, where it's like, probably someone using AI created a fake Jerome Powell resignation letter, and it's circulating on all the social medias.
Yeah.
And it's like, what a time to be alive.
Yeah. Yeah. But overall dollar selling yesterday,
it was a rough one,
Yeah.
For sure. And I want to talk Aussie in just a second, but we might as well talk about the big one here. This euro really stretched its legs out yesterday afternoon, getting back well above 117. It's almost like they tried 117 on Monday, Paul. Unable, obviously not a huge reversal here, but then tried 117 again here on Tuesday morning and then just ripped through it. U.S. dollar being sold. I mean, there's a number of things obviously going on between the Trump-Powell battle, as well as Lagarde talked yesterday. There's an ECB meeting tomorrow morning, and then there's a Fed meeting a week from today. What do you think is the biggest catalyst for this dollar price action, either right now or in the next handful of days? Is it the unknown of what Trump or Powell or tariffs, what's going to come out of that stuff, or is it what is the ECB saying, what is the Fed saying as it relates to European economy, U.S. economy, and I think we have a Bank of Japan meeting on Thursday night or something. It's either tomorrow or earlier next week. I saw that on the calendar, and I can find it. But what do you think is the biggest catalyst for people the rest of this weekend next? Because there's a lot of central bankers, but there's a lot of Trump news ongoing.
Yeah, there's a lot of uncertainty. We had Goldman come out yesterday with that there could be more rate cuts in the future than they think right now, or at least the market's pricing in. So there's that. You obviously have the ECB rate decision. You have a European trade deal that is really up in the air. I believe we have the August 1st kind of deadline with that.
Okay.
Which obviously can still be extended, and that's happened a number of times now. So you have a lot of things kind of unknown. If you're purely looking at it from a price action standpoint, we had euro kind of knocking out the door on 117, which we'll talk about whole levels. They don't always mean the world, but sometimes when you see it break that kind of round number of 117 and it breaks through it pretty significantly, then it keeps going. It has pulled back a little bit this morning, so it's interesting to kind of see where this one's going to head, but you're going to have to be really paying attention to the news because this thing's going to be swinging all over the place if we get something interesting coming out.
Yeah, I was trying to find this. I guess it's not until next week. That stinks. So it's just ECB this week, Bank of Japan. It looks like it's on the night of the Fed. So we have Fed Wednesday, Bank of Japan Wednesday night. And then a whole slew of just data all throughout next week. I believe we also have a non-farm, one of the weird first day of the month non-farms. So we'll get the July non-farm numbers on August 1st, next Friday. So, yeah, a whole bunch of stuff. And you bring up the fact that we're also being kind of held hostage by the August 1st due date, so to speak, for some of these trade deals coming in. But, yeah, we'll continue to monitor this one for sure, as well as that yen. Yeah, nice to see that this euro dollar has come off about 30 points from its highs. If we get a reversal back through 117, I mean, I do just want to call out that taking out the last few sessions, the last really what is this, Wednesday, really Thursday to now, this has been a pretty bullish dollar month of July. I just want to reiterate that, where we've gone from 118 down to 116, which was a nice little move. And now, unfortunately, dollar is giving some ground. Well, I mean, if you've been short dollar, then not unfortunate for you. Same with this dollar yen in here. This is still a month where we've gone from 143 up to 149 and now trading 146. So still a bullish month for dollar. It'll be really interesting because the last really 5 or 6 trading days of July here are just super action-packed with data and just there's got to be talk from Trump and some of these other countries around these trade deals because of the impending deadlines that are coming up, as well as, what the heck is going to happen with the Fed. I think it's worth taking a look just really quick so that we can maybe compare it next week to see where the heck we are with the Fed Watch tool. I'm still, looking at just a 5% chance of a cut next week, but a almost 60% chance of some kind of cut by the September meeting. And so we're in that weird phase. We've been here many, many times, and every time this year in 2025, this 2 meetings out or 3 meetings out has ended up becoming no cut, even though it's been overwhelmingly in that cut. I'm sure if you looked back at the July odds 5-6 months ago, this would have been overwhelmingly, it's going to be lower than the current range. And they just haven't gotten those cuts in yet because that data has not pointed in that direction. Last piece before we get to a study that I want to get your eyes on. I want to get your eyes on this. Holy smokes, this is a face-ripping rally in Aussie. Have you had a chance to see what the heck's going on here?
Not a ton. It's kind of going along the dollar selling story. But given the kind of optimism of the Japan trade deal, that's going to be exactly what's kind of one of the things kind of catalyzing this market. And because Aussie is such a exporting country, they're very reliant on trade deal economic or global economic trade to be kind of working as freely as possible.
Gotcha.
So that's where you get this. This is an aggressive rally. I mean, we were near 65 yesterday in this thing, or 65 last week, earlier this week, and this thing's been on a tear, and just hasn't really given up really any ground yet.
Oh, we were looking at 65, just yesterday morning, and this has been a sad Aussie market. That frankly, you might say, oh well, Frank, you just told me that the U.S. dollar has had such a good month, and so I would expect the Aussie to be down on the month when it's actually sideways. It's actually up here now in July. Whereas those other currencies that we're looking at, those other major currencies are down against the dollar in July. This Aussie, in my mind, if the U.S. dollar is taking off, Aussie should probably also be performing well against a number of pairs, just because the U.S. dollar has kind of been bucketed in that more risk-on currency bucket for the last several weeks. And so it's just it's one of those things that when dollar is getting hit and euro's rallying 100 points and yen's rallying 100 points and everything else, Aussie's we're up 20. And then when the U.S. dollar is fighting back a little bit, it's oh, we're going back to the lows for Aussie. And so it's been a rough one. We'll see how this continues. I probably would agree with you that this has got to be trade war talk. Anything that alleviates potential economic strife in Australia, China, Japan, those dynamics, that's going to probably be positive for this Australian dollar. Would probably monitor, when we get back to our screens, probably take a look at Chinese equities and a couple other pieces to see how this is all being digested. But so far, you can see a little bit more dollar selling on the yen front, some Aussie buying, and then this euro reversing a little bit. So a number of stories, and then finally, hopefully, this dollar able to make back some ground against the Swiss franc. But Paul, let's get into this study because it's an interesting one. I took a look, and I wanted to get your eyes on this. It's mean reversion profitability in non-dollar pairs. I love this stuff, man. We're getting as deep as you can possibly get into the world of Forex research. Looking at different time frames, looking at should you be historically speaking, should you have been following this trend? Should you have been going against the trend, contrarians versus trend followers? And now we're breaking into a little bit of a different zone. What about when we take the U.S. dollar out of these pairs and pit them against each other? Is there greater potential for mean reversion, or is there greater potential for them moving in a trend following exacerbated nature when we see a big move? That's been kind of the filter for a lot of this stuff, is when we see a big move in a given market, what's the chances of it reverting or continuing? Right off the bat, before we look at the research, what do you think would be the results of looking at some of this stuff where you take the U.S. dollar out? Do you think there's more of a tendency for extreme moves or more of a tendency for mean reversion?
I think it's going to depend, and it could matter by the pair. There's a lot of dynamics that go on in the cross markets. When I say cross, it means a non-dollar cross, so it's like something like an Aussie versus the yen. I could see it being very dependent on the time frame, depending on what's going on. There's a lot of other factors that play into these cross markets that you have to be aware of. But it'll be interesting to see. I'm not actually really sure. These markets kind of have their own game they play as opposed to the dollar.
It's funny, we follow those dollar pairs against the other major currencies so closely that a lot of these non-dollar crosses, yeah, can feel. I feel like I probably got a good grasp of Aussie Canada and Euro Sterling, but like Aussie versus the yen, don't really follow it very regularly, even though it's a pretty liquid pair, and we actually do see a lot of people trading it.
Yeah.
Same with that euro yen and pound yen. See a lot of people trading those pairs, and again, they're decently liquid non-dollar pairs in there. So I agree with you. I have already seen it, so I kind of remember the results, but I would imagine that Aussie Canada and that euro sterling they're just so not so they're highly correlated to each other. And so when you look at this right off the bat, before we even look at the results, and the fact that realized vol in a handful of these is probably less than what it is against the US dollar for these individual currencies, tells you right away that, like, oh man, this actually might be more mean reverting than seeing extremes. Now, what I would call out that I didn't really notice yesterday is that Aussie yen and that pound yen have actually been decently volatile. The fact that Aussie yen, Paul, is showing a 6.7% vol right now, and that's only the 10th percentile of volatility for the last year, tells you that vol has been super juiced at certain points throughout the year. So that's been a volatile trade. It's not high vol right now, but one that I'll probably go back and take a look at the charts and look for opportunities. Here's the study. We looked at the non-dollar crosses that we just showed you, measured realized vol, split the data into low vol and high vol subsets, and that's going to be marked at the 30th percentile. Anything below that's low vol, high vol above it. Simulated trade performance using contrarian trade entry. So we're just looking at contrarian trade entry, but again, since these results are essentially long or short the pair, depending on whether it was breaking below or above the Bollinger Band, obviously the flip side of these, one minus these numbers, is the trend following success rates. Looked at 2 standard deviation Bollinger Bands. So when the market broke below the Bollinger Band, got long. When it got above the Bollinger Band, got short. 2 standard deviations, that's 95% of the data. So pretty rare occurrence. Probably only happens once a month. So not a ton of data points, but Glenn did go back 5 years, so we got plenty of data points. Calculated the win rate and looked at 1 to 10 day time frames, Paul, compared the volatility environments. Right off the bat, low vol versus high vol. Here are the win rates, again, of contrarian trade entry when these markets hit that Bollinger Band, getting long to the downside and getting short on the upside. And yeah, I kind of knew this was coming, but man, the Aussie Canada and Euro Sterling results, especially in low vol, but even in high vol, I mean, those are some high win rates for a binary outcome.
Yeah, especially if you're managing your risks kind of appropriately. Those win rates would be doing pretty well for you. When I talk about kind of managing your risk, that's kind of your how much you win on your winners and how much you lose as a ratio. That is very important with this. It's interesting to see in some of these markets, definitely they kind of ping pong back between two levels a lot of the time. So it's not totally surprising, but it's interesting that it's Aussie Canada and Euro Yen as kind of one of those higher ones.
Yeah, Euro Yen too. Yeah,
you would think Aussie Yen would move around a little bit more, but it's actually kind of pretty flat on the.
I'm not super surprised to see that, given how high the volatility was in there. The highest volatility right now that we showed at the start, and the fact that it's only 10 percentile, which means like that thing's probably going to whip around a lot. And so that makes sense to me that you see plenty of moves where like Aussie Yen like skyrockets and then it keeps going, or is getting hammered and then it keeps going. But yeah, the Euro Yen throwing in there as well, especially in low vol environments, seeing high win rates. Super interesting, and great point on management, because if you have Aussie CAD and Euro Sterling, which we saw at the start, relatively low volatility, they're highly correlated to each other when you're measuring them against US dollar. you're probably not going to get a lot of, it just broke the 2 standard deviation Bollinger Band on the daily, or especially if you're day trading and you're looking at like an hourly chart or something like that, and it just broke the Bollinger Band, and now I'm going to look for like a 200-point winner. You might have in some of these 200-point range for a couple of months. And so when you see that big move outside of the range, you might be looking for a 20-point winner and loser, or a 30-point winner and loser. And obviously, you want them to be symmetrical so that you're not winning, 55, 60, 70% of the time, but your wins are a third the size of your losses, not engineered for success. The last thing really quick here, Paul, is just the time held. And it's interesting to me, in the low vol environment, that these success rate curves do kind of increase a little bit, not for that Kiwi CAD or for that pound yen or for that Aussie yen, but for that Aussie CAD, Euro yen, and Euro sterling. You do see the success rates kind of move higher over a couple of days, but then after like 4, 5, 6 days, they flatten out or move slightly lower. So in low vol environments, you can wait a couple of days, it seems, whereas in high vol environments, this to me looks so much more downward sloping to flat, telling me that I wouldn't want to necessarily hold these trades for very many days. If I get the move that I want intraday or in 1 or 2 days, I would probably be out in a high vol environment.
Yeah, I mean, it always depends on your strategy too. Like how long you personally want to hold trades. You want to take the overnight risk. I mean, you held yen overnight last night. You'd need been watching your screen until you went to bed.
You'd be in a different place today, and hopefully it's in your direction. But yeah, if you weren't expecting it, then probably not good to just hope it's in your direction.
Yeah, exactly. Yeah, so it's one of those things when you're holding positions overnight, you have some different risk on, and you have to either be willing to stomach that or set your stops and limits to kind of take care of that automatically.
100%. And with the takeaways here, non-dollar pairs are generally more mean reverting in low volatility environments. Yeah, saw plenty of 60%, 70%. Of course, these are historical rates. They don't necessarily indicate what's going to happen in the future. Aussie Canada exhibits the most success for mean reversion, regardless of vol environment. Crazy rates in there historically the last 5 years. Reversion trade success when vol is low, peaks around 6 days, kind of confirm that. And then, timing is less important in high vol, but waiting more than a day technically, historically, can improve those win rates. I'm not a huge fan of that, and I don't think I saw that overwhelmingly in the data. But that'll do it, Paul. Yeah. Thanks so much for jumping on for today's study. And thanks so much for watching. Tom, Tony, and Vanetta coming up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.